Outgoing Governor Raghuram Rajan is not expected to tinker with rates at his last policy. A CNBC TV 18 poll shows attention has moved from rates onto liquidity. We have Latha joining in to tell us all of the details of what she's expecting. Latha, over to you.
Well, this is a poll which is largely done by Ekta and me. So the first expectations, of course, are on the repo rate, which is standing at 6.5%. There, as you can see, largely unanimous are expected to remain unchanged. The CRR currently stands at 4, and no one expects that to be changed, or practically no one. And the SLR, which stands at 20%, again, no one expects that to be changed. Then let's move to where exactly the changes will come. Over the next 1 year, or rather in calendar 2016, will there be any rate cuts? There is more of an expectation. There's at least 70% who believe that 125 basis cut could come, as you can see. But anyway, that's not the event for tomorrow. For tomorrow, the event is largely going to be on liquidity. So let us pull that up. The market is only going to watch what Rajan says on liquidity. At the moment, banks have some 50-60,000 crores extra cash, which they go and give to the Reserve Bank on a daily basis. And that has helped push down yields a goodish bit. And as you can see, 60% of the guys we polled said that they want the liquidity to be kept at the current excess situation. About 10% said that it should be in, even more excess than it is currently. So 70% want liquidity to remain in excess. 20% say the liquidity could be brought down and it could be actually balanced. So banks don't borrow much from the Reserve Bank. They don't give much to the Reserve Bank. And there was a small group of 10% who believe that actually liquidity should move into deficit now. There are these guys who believe that liquidity should become once again surplus after October, November, when the FSNRB deposits move out. These guys are also worried about inflation. Coming to which inflation and growth, let's go to the next poll that Ekta did. The GDP forecast is expected to remain unchanged at 7.6%. That's a near unanimous call. And inflation as well is expected to remain unchanged at 5% for the Jan-March quarter. No change over there. If there aren't going to be too many rate cuts or only one cut more, will RBI retain the word accommodative in its monetary policy stance? 100% said yes. The RBI will remain accommodative, although it may be at best just one more cut till 2016, but probably with its liquidity stance, it will remain accommodative. But let me come to the last part that the markets really will expect. It's going to be liquidity more than anything else. The yields have fallen considerably, so that I really want to insist on. Also, my own suspicion is that the Reserve Bank governor could give a lot of steps to boost the corporate bond market that might electrify the market more than any of the interest rate announcements.
Okay, Latha, thanks very much for that. Well, we don't have to wait too long for the policy. Same time tomorrow, we'll